If you want to be rich, not just comfortable, then you need to understand one thing: stocks. Because every millionaire, every billionaire you admire, from Warren Buffett to Elon Musk, got rich through ownership. And that's exactly what a stock gives you: ownership. In this video, we're breaking down exactly how stocks work, why the rich love them, and how you can start building wealth through them, even if you're starting from zero. Welcome to Artificial Finance Clarity, where finance is made simple and wealth made possible. Let's dive in. Part 1. What is a stock really? Let's start with the basics. A stock represents a share of ownership in a company. When you buy a share of Apple, Amazon, or Tesla, you literally own a tiny slice of that business. Think of it like this: if a company is a pizza, stocks are the slices. The more slices you own, the more pizza or profits you get to enjoy. And when that company grows, sells more products, earns more money, expands globally, the value of your slice increases. That's called capital appreciation. Now, here's the part most people miss. Stocks are not just about buying and selling for quick cash. They're about owning productive assets that make money while you sleep. Part 2. How people make money with stocks. There are two main ways you make money from stocks. Price appreciation. You buy low, sell high. For example, if you bought Amazon at $100 and it's now $150, you've made a 50% profit. Dividends. Some companies share a portion of their profits with shareholders. That means even if you never sell your stock, you still get paid just for owning it. It's like buying a rental property, but instead of tenants paying you rent, the company pays you a piece of their profits. Part 3. Why the rich love stocks. Here's the truth: the rich don't work for money. They make money work for them, and the stock market is their favorite playground. Why? Because it offers something you can't get from a job: leverage and compounding. Let's say you invest $500 a month into the stock market and earn an average return of 8% a year. In 20 years, that's over $275,000. In 30 years, it's more than $740,000. That's the magic of compound growth. You earn money on the money you already earned. That's why wealthy people say it's not about timing the market, it's about time in the market. Part 4. Types of stocks you should know. Now that you know what stocks are, let's go over the main types. Common stocks. You get voting rights and dividends. Most people own these. Preferred stocks. You get fixed dividends, but less control over the company. Growth stocks. Fast-growing companies like Tesla or Nvidia. High risk, high reward. Value stocks. Undervalued companies like Coca-Cola or Johnson & Johnson. More stable and consistent. Diversifying between these helps protect your money while giving you room to grow. Part 5. How to start investing in stocks. Okay, let's get practical. Here's how you can start today. Open a brokerage account. Platforms like Fidelity, Charles Schwab, or Robinhood make it easy for beginners in the US. Start small. Even $50 or $100 a month can grow into something huge over time. Buy index funds or ETF. If you don't want to pick individual stocks, you can buy a basket of them through index funds like the S&P 500 ETF SPY. Think long term. Forget day trading or trying to time the market. The real money is made by holding great companies for years. Reinvest your dividends. Don't cash them out. Let them buy you more shares. That's how wealth snowballs. Part 6. Common mistakes to avoid. Now, a few warnings. Most beginners lose money, not because they're unlucky, but because they make emotional decisions. Buying stocks because of hype, panic selling when prices drop, putting all your money into one company. Remember, the stock market is a transfer of wealth from the impatient to the patient. So, be patient. Think like an owner. Part 7. Why stocks create millionaires. If you want to understand why the rich keep getting richer, here's the secret: they own assets that increase in value. Every time you buy a stock, you're shifting from being a consumer to an owner. You're no longer just spending your money, you're making it work for you. The poor spend money on liabilities. The middle class saves money. The rich invest money. That's the mindset shift you need if you want to build wealth. So now you understand what stocks are and why they're the foundation of wealth. The question is, will you keep watching from the sidelines, or will you start owning your future? Start small, stay consistent, think long term, because every great investor started with just one share. Subscribe to Artificial Finance Clarity for more simple, powerful lessons on money, investing, and building wealth. Remember, finance made simple, wealth made possible.